In the sectoral analysis, in all the sector analysis, you had finally given in red and green the positive and negative impact. Now, what does that mean? Positive impact on demand, positive impact on the common man, positive impact on the economy, positive impact on the fiscal deficit, positive impact on the macroeconomy, or negative impact on any of these things. Because aggregating the impact is something little dangerous. Number two, can you explain a little bit about the elasticity of demand with respect to taxation?
Analysis on the sector, performance of sector is restricted to how the industries of that sector are expected to perform. Like when we spoke about infrastructure sector, we spoke that out of the news and out of the union budget, the news, how are the various industries of that sector are expected to perform. Let's say a positive news in the infrastructure segment, like the construction of roads, will be a boost to the L&T and the various industries in that sector. So
in that case, your telecom analysis goes wrong, because there is a import of the mobile parts are going to be cheaper. In that case, then the industry should be happier, consumers should be happier. You said neutral impact.
Neutral to mildly positive, because of other factors.
It can't be mildly positive; it will be highly positive. So in that case, therefore there is a confusion about across the sectors which is negative, which is positive. And for that, as youngsters, the demand elasticity with respect to tax is something which has to be the parameter on which you have to roll this.
Yes. So to add on this thing, like we have seen the cigarette industry, because of the excise duty, we have given the negative impact. However, cigarette is inelastic. Cigarette have inelastic demand. But overall impact, the cigarette will be sold at that level only. The demand will remain same. But at the same time, custom duty and because of the prices, this will finally will see the negative impact for that sector.
So for inelastic goods, the burden of the taxes will be on the customers, and for elastic goods, it will be on the industry. So when we speak of cigarettes, custom excise duty rising, so the burden will be borne by the customers and not the industries.
Thank you, team.
Now I request Team 3 to come and start their presentation.
Okay, first and foremost, a very warm welcome to the judges and to all my friends who are present out here. We, as I think Mr. Suresh has already covered most of the aspects of the budget. Now, budget 2012, if you try to speak about it, if I ask you to rate it on the basis of good, bad, and ugly, there would be a sense of uncertainty, and each one of us won't be able to put our fingers as to, okay, whether it was good, whether it was bad, or whether it was ugly. The fact remains that what the FM has came out with is a googly, a dusra, which has stumped each one of us, be it analysts, be it economists. What we are trying to do, or what we have tried to do in our presentation, is try to demystify this googly and try to find out which way is the ball actually going to roll. So to set things rolling, let's have first look at the fiscal arithmetic. Now if you have a look out there, in regards to capital receipts, 92% of the capital receipts is in form of borrowings and liabilities. What does this signify? That most of my growth is coming in terms of borrowings. Coming down, if you have a look, there's a figure of total receipts or total expenditures. Out of the total expenditure, revenue expenditure consists of 86% and capital expenditure consists of around about 14%. What does this signify? Capital expenditure ideally means investing into capital assets, which will be generating a cash flow for the economy. We are, after spending so much amount on our revenue expenditures, what is left is quite less. Now, just to have a look at what the whole snapshot of the budget was, fiscal deficit for 2012-2013 is estimated to be about 5.1%, which again, even we deny the fact. We do not believe that it's going to be at 5.1%. I'm going to cover the same in this following slides. Moving on to the next, if there's something that the budget has given or the FM has given to the Ram Janta, is this new terminology known as effective revenue deficit. What is effective revenue deficit? Revenue deficit minus grants which are supposed to be spent by state on capital assets. How much amount of those grants are actually spent? That's the question. For us, or what I believe, it's basically a hogwash. Just to present your accounts or the books of accounts in a better manner, they have came across with this concept. Moving on to the next point is the capital expenditure. If we compare to the last year, the capital expenditure is about to rise by 30.6%. Yes, this is something which is actually good.